Hey everyone, it's Kuru here with another daily property update coming to you from Sydney Domestic Airport. Now they told you land is everything. The more land means more wealth. But is that true? Let me prove to you with real numbers that land isn't what's driving property wealth anymore. Because if land size determines success, the biggest blocks would be the best investments. Rural areas would be booming and every apartment owner in Sydney or the Gold Coast would be broke. But that's actually not what's happening. In fact, the data shows the exact opposite. For decades, the rule was simple: buy as much land as you can afford. It made sense in the 1960s through to the 1990s. Cities were small, infrastructure was expanding, and population growth pushed outwards. But Australia isn't the same country anymore. We've run out of cheap developable land near jobs and lifestyle hubs. Our cities are denser, the cost of infrastructure is higher, and affordability has flipped the map. Also, look at households and what households want. In the past, it was mum and dad, 2, 3, even 4 kids. Today, the birth rate is extremely low. We've now got more singles and more couples with only 1 child. And we've also got a lot of people from overseas who are used to apartment living. We've also got a huge amount of people who are downsizing. These are older people moving into their retirement years that don't want to be out in the suburbs away from amenity. They want to be in buildings with a lot of amenity. So you have to understand right now, and I'm going to share the proof with you, that these groups of people, immigrants looking for affordable property, first-time buyers looking for affordable property, young adults who don't want the big backyard, the dog, and 2, 3 kids, and also downsizers, empty nesters who are looking for beautiful buildings with a lot of amenity so that they can enjoy their later years. People don't want land anymore. They want location, walkability, safety, convenience, amenity. That's why the biggest capital growth over the last 5 years hasn't come from the largest blocks. It's actually come from the smallest, best positioned ones. I'm talking about house and land in great locations with smaller blocks. I'm talking about really great located townhouses, and I'm also talking about apartments. So let's look at the numbers. According to new national data from Newstar and Hotspotting, 62.9% of apartment markets across Australia matched or outperformed house price growth in the past year. In Perth, over 75% of apartment suburbs beat houses. In Brisbane, units are now growing within 0.5% of detached homes. And from 2025 to 2027, Oxford Economics forecasts units will outperform houses nationwide, 6.7% growth versus 6.2%. And take a look at this example. As you can see here, the house in the same suburb has grown a lot less than the apartment. Now, this is not my opinion. This is a complete structural shift, and I've shown you the data here, and this data is across the whole market. I'll put a few links to the Hotspotting and Newstar reports below. You must understand this. The size of your land doesn't determine capital growth anymore. The demand for what sits on it does. Also, in addition to that, you may be ruling out really great apartments that can do some incredible growth for you if you're stuck in the old mindset of land equals capital growth. This is why the land theory now fails. Here's the problem with the old land equals growth rule. Number 1, land doesn't compound, demand does. Land just sits there. What actually compounds is the income and demand tied to its location, proximity to jobs, schools, beaches, amenity, infrastructure, and lifestyle. Number 2, not all land is equal. A 600 meter square block in Dubbo doesn't behave like a 100 square meter block in Bondi. So that's an extreme example, but that example helps you understand the principle that land is not driving your growth. It's not the size of the land, it's the scarcity and desirability of the location. The most valuable land in Australia is often the smallest because it's the most in-demand places. Number 3, density drives value. Australia's cities are shifting from horizontal to vertical. The most profitable land is now the land that can hold more people per square meter because it creates more income and higher total value. So if you're buying based on how much land you get, you're playing a game that actually ended 20 years ago. You're old school and you're going to get left behind. So let's talk about the modern reality. You buy a 1.2 million house with a 600 meter square block renting for $800 a week. That's a 3.4% yield. Or you can get a $600,000 apartment renting for $600 a week. That's a 5.8% 8.2% yield. Both can grow. Of course, not all apartments are equal. Not all apartments are going to do the growth that you want, but also the same goes for the houses. But assuming you've picked the right apartment in the right location, and I've actually dropped some examples for you in this video, both can grow. But in this case, the apartment has way better cash flow, less maintenance, and a bigger tenant pool. Yes, there's going to be strata, but because you're getting such a higher yield, your net cash flow, even after the strata expenses, is going to be a lot better. You have to understand also that the investor that has the house and land has land tax liability. Now, on one property or two properties in your portfolio, having a lot of land, you're probably not going to pay land tax. But once you get to 3, 4, 5 properties, it is more than likely that you will start being hit with a huge land tax bill. And you're going to have to start to move to properties with less land. So that is another factor that people do not talk about. So as a property insider, I want you to have this new equation: demand per square meter. That's actually what you want, because if you've got hundreds of square meters of very little demand, that equation is low. But if you've got huge demand per square meter, then demand is high and capital growth will be high. Therefore, it's not about the land, it's about the property, the location, and the demand for that property. And of course, I've shown you some examples here of luxury apartments with basically no land, which have grown more than houses, in fact, a lot more. I just want to qualify this because a lot of people might say, well, Scott, you sell apartments and that's why you're selling that. Well, actually, that is untrue. Yes, I do have Australia's #1 property investment advisory. And yes, I actually do between 1,500 and 2,000 property deals every single year for my clients. But I can say that less than 5% of those are for apartments. So guys, it doesn't benefit me at all to be promoting apartments. That's not what this is about. This is about you becoming a property insider, having the data and understanding what is actually happening in the market. So here's the truth. Land is not wealth, demand is. The investors who keep chasing big blocks and cheap dirt are getting left behind. Or those who understand scarcity, design, and livability, who actually understand the demand equation per square meter, they're the ones that are going to win over the next decade. The property boom of the past was about land size. The property boom of the future is about location, efficiency, and demand. Guys, if you want more information like this, I do a video every single day. This is your daily property update, your 3 to 6 minute update on the property market so that you can become a property insider. And I'd love to hear your experiences. I'd love to find out your beliefs around today's topic. Leave a comment and let me know.